watching Global Mantra right here on 89. I'm still in conversation with Willam de Vijlder of BNP Paribas Investment Managers. Willam, within the emerging market pack, you've spoken about some of the markets that you're bullish on. You're very big on China. You like Taiwan, Korea. What's the sense about the MENA markets, the Middle Eastern markets, North Africa for that matter, or even some of the South American and Eastern European markets?
I think on MENA, sadly, we can be short in the sense that as an investor, you can look at the fundamentals and what have you, but it's all driven by what's happening on the geopolitical side. And that, in a way, is frustrating for an investor because it means that all your homework, you can put it aside and you just have to watch how things pan out. With respect to Latin America, the really disappointing market for many months now has been Brazil. I think it relates to the fact that Brazil is one of the very limited number of countries in the world where real interest rates are actually pretty high. I think as a rule of the thumb, it's very important to compare where real interest rates are compared to long-term growth. And what you see in Brazil, actually real rates are a bit above. They are to the tune of 5% or even a bit more. Of course, that is a reflection of the need to fight inflation. But at the same time, the currency has strengthened big time. This is really an overvalued currency, and that has weighed on the equity market. Now, the silver lining in the cloud is that there's a lot of pessimism around. So that's kind of a silver lining. So it means that there must come a point that there's so much pessimism around that, well, the market will recover. Do we see a catalyst now? No, we don't really see a catalyst. So it's really a market that we underweight because we think there's just more money to be made elsewhere. On Eastern European side, I think it's you have to be a bit selective. Some of the Eastern European markets like Hungary and Czechia have done tremendously. I think this is all very much specific to the markets. I think as a thematic, there's an attraction to it in general, and that's really related to Germany continuing to do very well. If on top of that we have a more, let's say, a less tense environment within the Eurozone, that would also have positive spillover effects on the Eastern European part. But the real call that we're making is on Russia when you're looking at European markets, and that is because of a combination of very attractive valuations. It's a cheap market. It has the oil exposure, and then from a macro perspective, let's say the richness that oil is bringing to the country will spill over in terms of more consumer demand and so on.
You like China more than India. Why?
China is from a valuation perspective, is more attractive than India. It has a number of macro fundamentals which makes it, in our view, more attractive. So when you're looking at the inflation environment, I think we have a bit of a clearer picture on China than we have on India. I think China should achieve, let's say, some success with respect to inflation fighting, and there are indications there, and that if that really is the case, then we should see a nice rally in the market in the second half of the year under the scenario that inflation is indeed peaking. That also would then mean that the worry of more aggressive interest rate hikes or reserve requirements still continuing to be tightened, that would go away. I think where India can come back, and okay, it will come back, of course, but it's all a matter of timing and getting the sequence right. I think what's important to follow is to what extent the thematic for Asia is going to be thematic like OECD is doing better, and it's really the export model towards OECD, or is it going to be more of a thematic of domestic demand? To the extent that it would shift towards domestic demand, or let's say regional Asian demand, because OECD would start to get some headwinds, then that would be to the benefit of India on a relative basis compared to China.
Right. Willam, then what's the sense about the future of various asset classes? I mean, whether it's bonds, currencies, equities, or even commodities for that matter. From a 2 to 3 year perspective, which asset class are you most bullish on?
On a 3-year basis, the answer is very clear. It's emerging equities. And the reason is that on the developed side, there's so much to be done in terms of bringing back the budget deficits under control that it will have a negative impact on the growth environment. So the growth differential, GDP and earnings of emerging in favor of emerging compared to developed is a factor that should underpin emerging equity markets on a 3-year basis.
Yeah, I heard you say 3-year basis. So beyond 3 years, if you were to stretch the time horizon, which one would you perhaps look at the most? Where do you think the maximum amount of potential would be?
Well, the answer is the same. When you look at what is the long-term expected return of an equity market, it's actually pretty simple to come up with a pretty realistic number. What you have to do is you have to look at what is the expected nominal GDP growth in the region, and then you add to that, and that is a good proxy for expected earnings growth, and then you add to that a dividend yield. So looking at the expected nominal growth in developed markets compared to emerging markets, it's obvious that you have a significant differential. And the same applies to expected real economic growth. So that means that even on a longer horizon, you have more visibility there.
All right, Willam, we leave it at that. Thanks very much for joining us on this edition of Global Mantra. With that, we come to the end of the show. But catch us next week again with another special guest.
I think there are two markets that we see as very interesting. One is Indonesia, which I think has the potential to be the sort of, if you like, the emerging market of 2011 in terms of the attention it will get. And the other is Turkey, which is, in a European context, Europe's emerging market. In terms of Indian M&A, a structural bias towards outbound. I think the inbound activity you will see will be a sort of hybrid between M&A and FDI, in the sense that it may be in the form of joint ventures.